Today we're joined by Douglas Isles from Platinum Asset Management. Douglas, welcome.
Thank you, mate.
Interesting times. How are you seeing markets?
Look, I think it is interesting times, but I think it's always interesting times. So people are dealing with, what we had in the last while. We've had the disruption of technology. We've had the rise of China. We've had all this unconventional monetary theory. We've got populism politically, and I think today front and centre is obviously the trade tensions. And so I think as we sit here at the beginning of June, we've had probably a month now since Trump sent out his tweet saying that things weren't being resolved with China, and that's probably the biggest thing that's in focus for people at the moment. It was the consensus had very much formed in the first few months of the year that was going to be resolved, and I think we had a pretty strong start to the year for markets, and that very much reflected that. But right now, I think almost every conversation that people are having is about how that's going to play out, how it's going to be resolved, if it's going to be resolved. What we did at Platinum was as soon as the sort of situation started to deteriorate, we took a lot of money off the table, a lot of it through shorting to protect portfolios. So, export-heavy nations or markets like Germany, Hong Kong, and Japan, we were quick to protect. Some of the technology stocks, the Nasdaq index, where again it looks like all that conflict is around technology as much as it is about the economy. So, we were very quick to respond at the beginning of the month of May. And I think that's really going to be the area of focus for markets for the next little while.
Okay, so US-China trade talks are a key risk.
Yeah.
Other risks globally?
Look, when it comes to there are risks if you think of them perhaps from an economic perspective or how things play out. From a market perspective, we've also got to look at the valuation and the price that you're paying for things. So one of the things that happens when people are concerned is they tend to flock to certain areas. We would say there are two big areas that concern us at the moment, and they're kind of ironic, if you like. It's the perceived safe havens, because people are paying excessively for safety in this uncertain world that we're in. That could be things like consumer staples, it could be things like the REITs, it could be infrastructure companies, where people have this idea that they're going to get a certain income stream over a period of time. And if you look at companies like Nestle or Colgate or Procter & Gamble, they've not been growing for a decade. So people are paying pretty high prices for companies that have stopped growing for various reasons, but generally disruption. The second area which is risky is the sort of hot, sexy stuff, what you might think of as these secular growth stories. One catch-all for its software as a service. Here in Australia, they're actually probably more expensive than they are even in the United States, but people are paying 15, 20, 25 times sales to invest in companies, and when you're paying that kind of multiple, even if they have perfect execution, you're unlikely to make any money or more than a reasonable return from owning them unless someone else is greater fool theory, if you like. So these are the two areas that concern us the most, the safe havens and then the secular growth stories.
In terms of opportunities, what are you seeing out there?
Yeah, so it almost feels a little bit like 1999 and back at the top of the tech boom, where everyone wanted to own tech and they didn't want to own anything else. And we talked at that time about the old economy. The old economy was really the economy. But a lot of what we're finding opportunities in are traditional, global leaders, industry leaders, companies like BMW, companies like Ping An Insurance in China, companies like Samsung Electronics, just to give you some examples, but companies that dominate an industry where there is some degree of, let's say, economic sensitivity, some questions in certain cases about the impacts of trade, perhaps some questions in the case of BMW, a transition to electric vehicles being a concern. But there are short-term concerns, but these are incredible businesses, just to give you a small selection of them. And we're actually able to build a portfolio today in global markets with a PE of about 10. And I don't think, other than in financial crises, I don't think you've been able to build portfolios like that. So there are a lot of opportunities out there, just clouded by the tensions and the short-term worries for where markets might go.
In recent years, Platinum has been overweight Asia.
Yeah.
How are you seeing that at the moment?
Look, Asia is still the largest regional component of our portfolios, and if you extend that to include Japan, you're up at probably 40% or so of the portfolio in the region, and that's very unusual for people running global portfolios. And it's very much a long-term story that is underappreciated by the market. So you look at the development of China, you look at the reform programs that have gone on there in recent years, whether it was early on actually building the infrastructure that enables the economy to develop. Then there was a clampdown on corruption, tidying up of the financial system last year. But what you have there is a phenomenal opportunity, and it's not being appreciated by most global investors. And then you've got Japan tucked away up there with it's had a 30-year bear market, but they're starting to improve as well. Corporate governance is improving in Japan. Valuations are incredible, and there's a lot of companies doing good things. So when it comes down to it, we're not allocating to Asia as a sort of pushing money into the region for the sake of it. We're finding individual companies with great prospects that are probably being overlooked by a combination of ignorance and fear in these markets. And so, yeah, we've made a lot of money in Asia in the last 5 years and continue to find it probably the most prospective region of the world for us in investing going forward. We are mindful at the moment that the likes of Hong Kong and Tokyo are vulnerable near term to the trade tensions, but as we look forward and you look to Trump's re-election, I'm sure we'll find that he loves a deal, and I'm sure we'll see a deal at some point, and people will become more optimistic again.
Great. All right. Thanks, Douglas. Thanks for your time today.
No problem. Thanks for having me.